Hey, hi everyone. Welcome to the central pivot range and the strategies related to them and why they are used a lot by the traders and their performance and in trading with specific examples and what differentiates these indicators from other indicators is what we'll go through today. So Camarilla pivot points in general or leading indicators, and they are same across time frames. That's the beauty of these indicators. And yeah, let's delve deeper into what Camarilla pivot points are and CPR are, and what are the strategies related to them, and the performance of traders using them, and which traders use them with specific examples, and what differentiates them with other indicators. So, what are Camarilla pivot points? So, Camarilla pivot points basically they're putting a short form as CPP, and these are pivot points, and which give you S1 to S4 levels, support levels, and R1 to R4 levels, the resistance levels. Okay, this was invented by Nick Scott in the late 1980s and first used by bond traders. And CPP, this Camarilla pivot point, seeks to outline mean reversion behavior. So, mean reversion is when a price moves away from the mean, it has a tendency to come back to the mean. Okay, and the price moves away from the mean due to speculation and or due to a supply demand imbalance. It moves between buyers and sellers. It moves away from the mean, but yeah, again it has to come back to the mean because mean is the ideal price. Okay, and yeah, so that's what mean reversion is. So we anticipate that whatever discrepancy of the prices from the mean due to speculation or due to imbalance in supply and demand between buyers and sellers, it will revert back to the mean. So, and this CPP, which is Camarilla pivot point, will basically outline this mean reversion behavior using mathematical formulas. And these formulas are based on prior days. So the previous days high, low, and close. So the previous days high, low, and close are very crucial in this Camarilla pivot points. And the previous day high, low, and close is used to find out the S4 to S1 and R1 to R4 levels. And the main strategy which is used in Camarilla pivot points is it generates nine levels S4 to S1, which act as support, and R1 to R4, which act as resistance. But S3 and R3 is the primary flip zone for Camarilla pivot points. And S4 and R4 are breakout levels. So at S3, if the price is moving down, it will take support there, and it will go up. At R3, if the price is moving up, at R3 it will take resistance and it will move down. So that's a general trend. S4 R4, if the price breaks S3 and then S4 also, then you can understand that it's a downtrend. And or R4, if it breaks, then it's an uptrend. We can identify and we can take a breakout trade there instead of a reversal trade at S3 and R3. Central pivot range is the CPR. This is also very crucial indicator, and this is based on pivot point, which is the high plus low plus the center divided by 3, and BC, the bottom one, which is high plus low by 2, and TC, which is the top line, which is the pivot point plus PP pivot point minus the BC. So this is how we know it's calculated. Three lines appear on the chart. Okay, so I'll show you the chart also how these appear actually. Okay, so see, this is the CPR and this is the Camarilla pivot points. Okay, so let me remove the other indicators. Okay, and so see, so this is the CPR. So in this CPR, you see these three lines are there, right? So this is the CPR. Generally, above it is bullish and below it is bearish. And again, within this CPR, okay, so still Camarilla is on. Okay, so CPR, what it has is it has this central pivot point has its own resistance R1, R2, and supports S1, S2. But these three lines are the central pivot range. Okay, so if I remove this, then this is the Camarilla pivot points. So it has L3, H3, H4, L4. I only put these points because I removed the other points. Okay. General strategy would be, at H3 if a reversal trade is taken, and at L3 a support trade is taken, and pivot points. And if it breaks H4, you'll take a buy. At L4 a put option you can take. Similarly for CPR, so these are the lines. Above it indicates a bullish bias, and if it is very close or near, then there will be momentum in the market. That is what is a thumb rule. Resistance will be faced here, again here, and support will be faced here and here. So that's what this Camarilla CPR is, and Camarilla pivot points are. Okay. Yeah. So how they are used in trading? So mean reversion is the first scenario on S3 and R3. So in Camarilla pivot points, we can when price touches S3, you can consider a long position, and you can exit at S2 or at the pivot point or the CPR, or you can exit at R3 also. Okay, generally they do that. When price touches R3 and resistance is faced there and some red candle is formed, then you can take a put position and exit at S3. Similarly, when price touches S3 and a green candle is formed indicating support, then you can take a long position or a call option and exit at the R3. Breakout trades, you can use it for other than mean reversion from S4 and R4. So if the price breaches R4, then it's very strong momentum. We can take a long position there and put a stop loss below R3 and targets at higher levels. You basically trail the trend, and so that you can catch the entire move. Similarly, for S4 also, if it breaks S4, then it's a very strong downtrend, and you can put a stop at S3 and trail it to get higher levels. Range trading, CPR zone. So trading between S1 and R1, you can do by using CPR to confirm bias. Okay, so strategies that are adapted. These are used, across intraday positional and swing trades. Okay, why traders favor them? Because of tighter volatility adjusted levels versus classic pivots, more responsive to recent range, and these provide clear entries, stop loss, multiple targets across the support and resistance zones. These are popular among day traders on platforms like MT4, MetaTrader 4, TradingView, Think or Swim, which is TD Ameritrade platform. Mean reversion setups at S3 R3 often show 70 plus percent win rates. Okay, so Camarilla pivot point accuracy is 70% plus win rate. Okay, as per anecdotal reports. Okay, this is anecdotal again, but that win rate is very high. Okay, on a buy setup, having 70% win rate is like too much. Okay, so and these offer you that, and these are leading indicators, not lagging indicators, and yeah, that's the beauty of these indicators. So performance and evidence. Quantified strategies have been backtested in June 2024. So Camarilla pivot points added a limited alpha over standard pivot points. So they improved the alpha, okay, which is written, and they advise individual backtesting is essential for each market. Yeah, so it outperformed in that backtest they did the standard pivot points by a certain extent. Cases examples are using S3R3 for Camarilla pivot point reversals on S&P futures, showed win rate of above 70%, risk reward of 1.5 to 1. When we take win rate was 70% by using Camarilla pivot points. Breakout trades from R4 captured 2 to 3 standard deviation moves with 60% win rates. Combined performance of 10 to 20% net annual returns for these setups. Client testimonials show that traders report improved intraday performance from 55 to 70% accuracy using Camarilla pivot points. Okay, so win rate is very high in Camarilla pivot points, and at it's tested on S&P futures. It's worked well for the reversal trades as well as for the breakout trades. Net annual returns are 10 to 20%. Intraday also around 70% accuracy. CPR, it adds value. It defines a bias central zone. Above that CPR, it's a bullish bias, and below CPR is a bearish bias. Okay, and it also helps you differentiate between range bound markets and trending markets. So if that three lines are very close, then it indicates trending market generally. not all the time, but generally, if the lines are very long, huge, right, then it's a range bound. Most likely would be a range bound market. Or if the prices within those three huge lines, it's most likely would be a range bound market. And it's also very effective in determining trade direction. If it's above the CPR, most likely, again, most likely, nothing is for sure. There is a probability only, everything, in trading. So most likely, it's effective in determining trading direction and putting a stop placement. Key differences from other pivot tools: more levels are there. S1, S2, S4, and R1 to R4. Around 8 levels are there. Versus classic pivot points only have S1 to S3 and R1 to R3. Volatility adjusted using 1.25 to 1.5x the range makes levels sharper, and stronger emphasis on mean reversion S3 R3 and breakout confirmation S4 R4. Unlike Fibonacci pivot points, which use percentage ratios, CPP uses fixed multipliers for range sensitivity. Why it works and when it doesn't? So pros are high. These are high probability mean reversion points because 70% accuracy is there. So this is high probability mean reversion point. Built-in volatility adjustment is there for dynamic levels, and easily tradable with defined stops and targets, and it's a leading indicator. Cons are, again, it's not foolproof. It will give false signals in low volume or choppy markets. In choppy markets, nothing works basically, and you don't know in prior, whether it's going to be a choppy market or trending market. Only we can take a guess by using CPR with whether it's going to be volatile market or a choppy market. That's again not for sure. So false signals can get generated in low volume and choppy markets. Performance varies by instrument and time frame, so you need to require rigorous back testing needs to be done on the specific instrument and time frame that you're testing. But these lines are across time frames. Okay, those are fixed lines across time frames, and it's a leading indicator, which is a good thing. Absence of connection with other filters reduce reliability. Yeah, so you need to, if you use them with momentum and volume indicators, that increases the probability. When you don't use, some reliability is reduced, but compared to other indicators, still it has a higher probability. Camarilla pivot points, in summary, provide intraday calibrated support and resistance levels with clear trading rules and real world traction. These have in retail and prop traders. Level are focused strategies like S3R3 mean reversion is 4R4 breakouts have yielded 70+% success rates with net returns in the percentage of 10 to 20% for disciplined traders. Again, for disciplined traders, not for any traders. And they stand out through compact level design and adaptive measures. Though robust backtesting and filter integration still remain essential. Okay, so that's the Camarilla pivot points and central pivot range uh, for today, and these are leading indicators and the strategies which we can use with these indicators, and the success ratio, and how they are used by different traders we went through today, and the backtesting results also we have went through. So that's it for today, guys. Thanks everyone. Have a nice day. Bye.